We will talk about the GDP data that came out this morning that is frankly pointing at the worst case scenario. We got to pay attention to this. We've been warning about it for months. It might be here. We can talk about taxes. Taxes going way, way up. We're talking 1922 levels. Talk about what a chief economist is saying. And then finally, going to highlight some surprise content that you will get today. All right. What do I mean by the fact that Elon Musk just kicked Mark Zuckerberg's butt? Well, let's look at their two earnings, their quarterly earnings, and more importantly, let's talk about what happened in the conference call, because that is where Elon kicked Mark's butt. So again, their earnings really couldn't have been that much different. I don't think it's unreasonable to say that Tesla had their worst quarter in a long time, right? They missed on revenue, missed on earnings, lowered expectations, just an ugly, ugly quarter. When you look at the quarter that just passed for Meta, they had a great quarter. They exceeded expectations on revenue. They exceeded expectations on earnings. But then we get to the conference call. And again, this is where Elon just schooled poor Mark Zuckerberg. What happened? Elon talked about the future. He sold the dream of a cheap EV. He talked about another automaker possibly licensing technology. He painted a vision of hope, and the market bought it hook, line, and sinker. Again, they missed on earnings, but their stock pops. All right, what did Zuckerberg do in his conference call? Well, frankly, he talked about all the ways that Meta was burning cash. Yes, the metaverse, $3.5 billion. AI investments, just everything, just entirely different story on the conference call. One was painting a future of goodness, and one was painting a future of burning capital. The stock market has clearly said Musk wins, Zuckerberg lost, and frankly, folks, it's not even close. This might be Mike Tyson versus me kind of battle. Again, Musk cleaned Zuckerberg's clock. What happened on GDP print this morning, and why is the market unhappy? Folks, if you've watched this channel for any length of time, you know that the worst case scenario for the economy is stagflation. I have said repeatedly and will say again, a recession is better than stagflation. The Q1 GDP report points to stagflation. We will likely see stocks down and rates up. Yes, the 10-year note will be up. Mortgages will be up. It will be an ugly day. What happened? Expectations for Q1 GDP were 2.4%. Healthy growth. What actually happened? 1.6%. It was a significant beat to the downside. Folks, when the economy is shrinking, that should be good for rates, right? Because, hey, we want the economy to slow down so the Fed could cut. Gotcha. What happened behind the data? Inside the GDP report, we got an inflation print that was ugly. The inflation print called the PCE deflator, 3.4% up from last month. The core PCE deflator, 3.7% up from last month. So again, folks, we have costs, inflation going up, which would mean you would want to raise rates, while the economy is slowing down, which means you want to cut rates. Stagflation, ugly. The only fix for stagflation is either to take rates up very, very fast, to slam the economy into a recession, a la Paul Volcker, or you can hope with time things work out. This is ugly. We're talking 1978, 1979, ugly. It is bad. So again, stock market's not happy. 10-year note up. Mortgages will be up. Going back to 8%. We shall see. I think investor loans are certainly over 8%. So again, what about taxes? I don't know if you saw this, But again, this is something we have been talking about. We have been warning you. I have been telling you taxes are going up. There has been a proposal by President Biden to take the capital gains tax from 20% to 44%. 44%. Folks, that's higher than Jimmy Carter. If you don't know who Jimmy Carter is, you're too young, look it up. Yeah, he was often called the worst president of the last 100 years. No bueno. Jimmy Carter took capital gains tax up to about 40%, if memory serves. President Biden wants to do him one better. Go to 44%. But that's not it. That's not all. President Biden would also like to issue a tax on unrealized gains. Folks, some of you are hearing that and going, good, about time those rich people pay. Let me just tell you right now, be careful what you wish for. If you get a 20% tax on unrealized gains, do you know what's going to happen? You are going to have forced sellers. Now, maybe you want forced sellers. Maybe you want everything to burn. I don't know. But trust me, you do not want all that extra float. You do not want people being forced to do that. It would be a disaster and lots of unintended consequences. But yes, folks, taxes are going up. You can look it up. Go look at a graph. You have to go back to 1922. 1922 to see a capital gains tax higher than the proposed 44.6% by President Biden. Wow. Last thing to point out there, if you've been watching my channel for a long time, you will know that occasionally we sell a property that we bought years ago and we just pay the capital gain, we just pay the tax. I can promise you, we will never, ever sell one of our properties if capital gains tax is 44.6%. We will keep them till the day we die. We will let cost up, or whatever that is, cost basis rise after our passing. It is wild, wild. You want to see transactions collapse? Put a 44% tax on capital gains. Crazy. How about the chief economist over at Piper Sandler? Shout out Nancy Lazar. Nancy Lazar, Piper Sandler, chief economist. She is pointing out that we have a bifurcated economy. Who else has been telling you we have a bifurcated economy? This guy. Folks, it's where we're at. We have some folks in some companies benefiting from high rates, right? People with cash balances, people who took their balance sheet, put on long-term fixed rate debt. They are living the good life. And then we have everybody else who is being hurt by higher rates. This is the bifurcated economy. Nancy Lazar, I love this call. Nancy Lazar puts the chances of a recession at 53%. Nancy, I just got to applaud you for being specific. Not 50, not 55, 53. 53% chance of a recession in the next 12 months. She actually says we need a recession to bring inflation down. Yeah, if we get the GDP print like we had today, higher inflation, lower growth, we may have to be forced, a la Paul Volcker, to go into a recession. Nancy Lazar is concerned about sticky inflation more than a recession. And after today's PCE deflator, you have to agree. The number today was just ugly. It was like worst case scenario. Slowing growth, higher inflation. It's got to be like, what does the Fed do with that? Slower growth, cut rates. Higher inflation, raise rates. It's ugly, ugly. Now, it could turn around. We'll get more economic data. We actually get PCE tomorrow. Not looking good based on today's numbers, I'll tell you, but we get another reading. It's something to be concerned about. Stagflation. If you don't really know what stagflation is, and you had 10 or 20 minutes today, I might recommend doing some Google searches on stagflation because it's a particularly ugly economy. It is bad. Go ahead and research if you want to. You can look at 1978 and 1979 if you want to get schooled up on just how yucky and just ugh, an economy can be. Go research 1978 and 1979. Alrighty, folks, I want to tell you about 2 surprise content today. Again, I'm at Think Media's Grow with Video conference today. Shout out Sean Cannell and the entire team at Think. Because I am there, I am releasing 2 previously not aired presentations. At 12 o'clock today, I am releasing a 3-hour deep dive from Dan Bird on how to use charts to make safe and wise investments. A lot of you love our Sunday conversations. We just got a midweek update yesterday. Trust me when I say this 3-hour masterclass will change your investing future. 12 o'clock, set your alarm. It will be amazing. And then, not to be outdone, at 5 o'clock today, these are all times Pacific, you will get the Uneducated Economist. The Uneducated Economist, Simon, came to our event in Vegas and blew the house down. This is a presentation that has been locked behind a paywall. I'm going to give it to you today at 5 o'clock. It is just over or just under an hour long talk. Simon, the Uneducated Economist, is amazing. You will see him in all his glory talking to our audience. So again, folks, it is hands down Musk beats Zuckerberg. And frankly, it wasn't even close. I hope you enjoy the 3-hour masterclass from Mr. Dan Bird. And of course, I hope you enjoy the Uneducated Economist at 5. Folks, set your alarms. You are not going to want to miss this. I'm off to Grow with Video. Grow with Video? Where did that come from? Grow with Video. Sean, we'll see you in a little bit. Later, guys. Bye.